Hello everyone, my name is Hock. I'm the president of the Singapore Fintech Association. Today I would like to present a topic on the Singapore Fintech in the face of the COVID-19 pandemic. First, I'll start with a background on the COVID-19 pandemic, followed by challenges that Fintech face during this pandemic, and what are some of the silver linings that happened due to the pandemic. And last but not least, I'll talk about the Singapore Fintech response to the pandemic. First, the COVID-19 pandemic has been unprecedented in the history of mankind since the last major pandemic that happened in 1918. It is a global pandemic, and it has transformed from a health crisis to an economic crisis. Many businesses and industries are affected, and fintechs are not immune from this. Although fintech arose from the last global financial crisis in 2008, but this time is different, and many fintechs are affected. From the statistics provided by CB Insights, you can see that fintech deals has been down sharply year on year in Q1 2020. The funding level has fallen back to 2017 levels after experiencing a high in 2019. Actually, investors are still investing, but they are very cautious now, and they are focusing on their existing investees, their existing portfolio of investees, instead of looking to invest in new fintech companies. But the impact on the fintech sector has not been even. Different subsectors in fintech experience different levels of impact. Some of the subsectors that are more heavily impacted are digital new or challenger banks like Revolut or Monzo. Due to the crisis, more customers are now less confident of putting money with challenger banks. During crisis, they rather put their money in traditional financial institutions. Next are the cross-border payment fintechs. Due to the lockdown of most major countries and cities, international travel has been heavily curtailed. This has reduced overseas spending substantially. Similarly, remittance will also be affected. Hence, fintech companies that focus on cross-border payments are also affected. Next are the robo-advisors. Same thing with challenger banks. During crisis, consumers are more comfortable investing with a traditional financial institution. Last but not least, marketplace or P2P lenders. And the key reason being that most of their customer base, the individuals, the SMEs themselves are experiencing cash crunch during this pandemic, and bad debt is likely to rise higher. So last few weeks, we have been seeing news whereby various fintech companies has been cutting their staffing level. For example, Monzo in June 4th announced that they are laying off up to 120 employees again due to the economic situation created by the pandemic. Same story goes to Revolut. They are laying off 60 workers again due to COVID-19. However, there is a silver lining. If you look at the graph on my left, this is a curve of the daily new cases. You would have noticed that for most countries, the number of new cases either peaked or they are plateauing, or they have flattened. Countries like China, they have flattened their curve. Countries like Hong Kong, Taiwan are doing very well. Even countries like New Zealand, they have declared that they are 100% COVID-free and have removed all the safe distancing measures. So over the next few months, we will start to see more and more positive news. Countries start opening up their economic sector, followed by opening up their borders to facilitate cross-border flow of people and goods and investments. This is a very common diagram shared around the internet and social media, showing that COVID-19 played a much bigger role than your CEO or Chief Technology Officer in leading digital transformation in your company. Due to the sustained safe distancing measures, behaviors of consumers and businesses are changing. People are now doing home-based learning. People are working from home. People are buying online. Why people can't do finance digitally? And it really happened. For example, in Singapore, various fintech companies and banks has experienced a significant uptick in digital transactions. For example, DBS Bank, they expect to achieve 1 million customers going fully digital this year, 1 year earlier than they projected. Currently, they have 900,000. They also reported that 30% of the new online spenders are above 50 years old. For OCBC, their Pay Now transaction increased by 3 times year on year. Corresponding period, their ATM transactions reduced by 20%. For UOB, they experienced online spending increasing 22% year on year in Q1, while transactions in their banking mobile app increased by 44% year on year. GrabPay experienced 200% increase in transaction for their Grab food services because during the lockdown, most people are ordering food delivery services. Similarly, for Singtel Dash, which is a remittance app, they reported that their remittance volume increased by 70% between February and April, while their remittance customer base doubled during the same period. So as we can see, the COVID-19 has in fact brought about more opportunities for certain sectors of the fintech sector. Payment fintechs flourish due to the low-touch environment. People are switching over to electronic payments. Trading fintechs, the likes of Robinhood, experience tremendous growth due to the extreme volatility in the stock markets. Fintech enablers and infrastructure providers like Amazon Web Service will experience more growth because more businesses and more financial institutions will double down on their digitalization efforts. How has Singapore responded to the COVID-19 pandemic? First of all, I would like to share a little bit about the Singapore fintech ecosystem, because I believe every country, their ecosystem is a little bit different from one another. For Singapore, we are the largest fintech hub in Southeast Asia. Close to 45% of all fintech companies in ASEAN are based in Singapore. As an advanced economy, we have a very broad-based ecosystem of fintech companies, ranging from payments to lendings through RegTech and InsurTech. Moreover, Singapore being a small market with only a population size of 5.6 million, most of our fintech companies, or about 8 in 10 of them, are B2B fintech, as in they provide solutions for financial institutions or businesses. And more than 80% of them do business beyond Singapore. And naturally, due to the global lockdown, Singapore fintechs are more affected relative to fintechs in other countries. In March this year, we did a survey with our members and they responded. Close to 48% of them feel that the COVID-19 has had a significant impact on their businesses. While the larger fintechs are faring better, largely due to the bigger funding they have raised over the last 2 years, the smaller fintechs are feeling the pinch. Many of them only have enough cash flow to last the next 6 to 9 months. And the top 3 concern areas for these fintechs are business costs, fundraising, and sales lead generation. So what did the ecosystem do? On the 8th of April, the Monetary Authority of Singapore, or MAS, announced 125 million support packages for financial institutions and fintechs. For example, under the Digital Acceleration Grant, 80% of the costs spent by fintechs on digital tools such as cloud hosting or cloud computing can be claimed from MAS. Typically, a fintech company will spend up to $60,000 a year on cloud computing, and that 80% of grant is a significant savings for them. There is also a training allowance grant to encourage fintech companies to send their staff for training during this lull period caused by COVID-19. And then there is this Epic Cash that gives free 6-month subscription for fintech companies to post their APIs on the Epic's platform so that they can be discovered by other financial institutions, so that during this period we can help them to do sales on that digital platform. There is also a compliance readiness framework and self-assessment tool that we have rolled out because most of our members do business with financial institutions. However, for financial institutions, they are governed by various regulations, especially those related to outsourcing, to technology risk, and cybersecurity hygiene. So we came up with a framework that defined the minimum compliance standard. And then we gave our fintech an online self-assessment tool so that they know where they stand in terms of their compliance readiness to work with a financial institution. And then we roll out a few workshops for the fintechs to close the gap. We hope that through this framework, it makes the fintech companies more capable of doing business with financial institutions. While for the financial institutions, they will have more confidence when dealing with Singapore fintech companies. On the 17th and 23rd of April, both private sector players like AMTD and Razer grow out investment funding to help fintech companies through this period with fundings, whether is it bridging loans or equity financing. Because I shared earlier, during this period, a lot of investors are cautious or not willing to invest in fintech companies. On the 4th of May, we worked with AMTD to roll out a global fintech fellowship program. This is a 5-year program whereby we will identify up to 10 fintech founders and help them to scale across the world, whether it's in Middle East, North America, or Asia, so that they can increase their network and connectivity for them to grow their business across the world. Last but not least, on the 13th of May, we roll out a Fintech Solidarity Grant. This grant is consisted of two components: a business sustenance grant, whereby fintechs can get up to $20,000 to defray their cost on rental or salary. They can also apply for a business growth fund that gives them up to $80,000 to do proof of concept projects on the Epix platform with financial institutions. In addition, they can get up to $20,000 for employing interns to work on all these proof of concept projects, so that the interns also get a chance to work on cutting edge technology. So overall, the theme about the fintech response in Singapore is about saving jobs locally, while at the same time helping our fintechs to grow globally. In conclusion, fintechs are not spared from COVID-19. However, COVID-19 has been a game changer for digital finance. It has accelerated digital adoption by consumers and businesses. It also accelerated digital transformation by financial institutions. Medium to longer term prospects for fintechs are very positive. However, in the short run, fintech companies will have to adjust to the new norm, and they can leverage on the measures and schemes that we have came up with to tide through during this difficult period. Singapore has taken a total ecosystem approach to help our fintech during this time and also prepare them for the eventual economic recovery. We hope that we could catalyze similar responses from other countries to help their respective fintech community. Thank you.